Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the chart. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical structure level for this market. In fact, from here, multiple rejections to the upside were created every single time the market created quite strong rejections to the upside, which lasted for several months. And at the moment, we can see how the market is testing the exact same zone, has already started rejecting it to the upside. And in a situation like this, we could expect more bullish continuation to be created away from this area, as already happened in the past when the market was testing this zone. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, what we can see is that at the moment we just had a break of structure. In fact, from here, the market started creating lower lows and lower highs, essentially breaking below this previous low and creating a new lower low here. Then, however, the market created this accumulation area with horizontal price action. After that, the market broke above this accumulation zone, as you would expect when the market creates an accumulation phase. In fact, I did make a full tutorial on this, on what accumulation and distribution areas are. You essentially have a strong impulse to the downside, then you see sideways price action. This is an accumulation area. Then you have a rejection to the upside. Again, you have a distribution area in this case, and the market creates a rejection lower, just to wrap it up as quickly as possible. But I really suggest that you go and check out in the tutorial section of my YouTube channel, the entire tutorial. This is very, very interesting. Now, from a structure perspective, as I was saying, the market has now broken above this level of previous monthly resistance, which is now turned support. In fact, following here the movements of this market, what you can see here is that this was an area of previous resistance from which this move to the downside was created, which now is turned support. The market has in fact already retested it here with this wick and is currently rejecting it to the upside, which, by the way, is exactly what we expected. In fact, going down on the daily time frame, if you remember, I did speak about EURUSD a couple of times already in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. And again, after this move higher, when the market was here, I explained all the reasons for which first we could expect this move lower, and then from here, this rejection to the upside, which in fact is exactly what the market gave us. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. Now, it's definitely time to assess the new structure that we have when it comes to the daily time frame. However, before we get into that, I want to speak about what we have from a COT perspective, so essentially the order flow of institutions, and I want to check the data precisely for the euro. Now, the first thing that you have to keep in mind is that if you're checking the data for the euro, you're actually already checking EURUSD. That is because all currencies on the spot are traded against the USD. So if you're checking the euro already, you're checking EURUSD. And what we can see here is that with the last reports, net positions have been increased. We went from having 75.5k net positions all the way up to having 89k net positions, with an extra 1,600 longs added with the last report and 2,000 shorts getting closed, reaching a total of 212k longs at the moment from an institutional perspective on EURUSD, compared to only 123k shorts. So essentially, we have almost double the longs compared to the shorts. So EURUSD at the moment is extremely strong. So Moving back to the technical side of this market, what we can see now. First of all, we can see that as institutions were longing, clearly the market was pushing higher. However, when it comes back to the technical side of this market, we can notice how with the creation of this impulse, we had a break of structure. In fact, this previous high has now been broken to the upside. Now, after an impulse, which is exactly what we have here, if the market follows with a correction, which it should, you would expect the market to create a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. And in general, if you want to measure a correction after an impulse, you have to take your Fibonacci from the low to the high of the impulse leg. So if we do that, if we take our Fibonacci from the low to the high of this impulse, what we can see is that we have a 0.32 and 50% retracements levels at the moment exactly lining up in this area of price. And if we extend this level to the left, we can see that this was already a quite important level for this market. In fact, it was acting as previous support here when the market created these two rejections to the upside here. Then the market broke below that zone. At that point, that previous support was turned resistance here. Again, quite closely here, the market tested its zone and rejected it to the downside. Now we broke above the zone. So essentially what this means is that if the market will provide a correction to this area, this is actually a confluence of support zone. And instead of a confluence of support, if you have a market in which already institutions are adding longs, you could expect more institutional longing. And that would essentially increase further the probabilities of a potential rejection to the upside away from this level. So if we will have a correction to this zone, how we could be approaching this potential rejection higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, potentially, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point, we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down past the testimonials, you will see that you have the possibility to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible. The link is both in description and in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.